Master for the morning, Anand Shah, the head PMS and AIF Investments at ICICI Pru AMC joins us. Anand, good morning and thank you very much indeed for joining us. First up, are you all going into cash mode or are you all in buy mode at this point in time, considering that the market's been kind of losing steam?
Hi, very good morning and season's greetings to all of you in studio and to all the viewers of CNBC TV18. I think from market's perspective, we are well poised. I think we had a very strong earnings growth rate. You had a strong beta in the market, and obviously the alpha was also great given you had a very wide spread. So unlike 2020 when there was a very narrow moves in the market on the way up, 2020 to 2024 and 21 to 24 has been a very broad based. So I think both the alpha and beta were great. What we are seeing here from here on is, I think, on a back of very strong earnings growth rate, the expectation from beta, the expectation from the earnings growth rate should be far more muted. And to that extent, market can deliver, but it cannot deliver what it has delivered over the last 4 years. Similarly, stock picking is becoming that much more difficult, but it would be the year 2025 and beyond would be year for more stock picking, more bottom up rather than top down. As we speak today, we still find selective ideas which we are putting it in the portfolio. And to that extent, there's no rush to create a lot of cash into the portfolio at this point.
Oh, you are not into cash. How much would that be anyways?
No, I think as a philosophy, we don't unnecessarily keep a lot of cash. Cash is only basically deploy or change the ideas from one sector to other. So philosophically, we don't.
Okay.
It seems like Santa is showing up a little late, but he's still showing up on the screen. I mean, these days, when you see this kind of large cap buying, you just think that, oh, wow, it's a sigh of relief, right? That's what's been happening, at least for now. It's all the Bank Nifty and the Nifty this morning. Anand, hi. Good morning. Season's greetings, and we wish you a fantastic end of the year and an even better 2025. And before I talk about the market, actually, I want a theoretical question. What we were just debating, this whole business of year-end NAV management. Does it still exist? Does it still happen? I mean, we're in the day and age of automatic trading, and a lot of people would be off on the new year. But you tell us, you're working with an asset manager for so long. What to expect in these last few days? Today's buying, for instance, this large cap buying that we're seeing, could it be related to so-called NAV management? What does it really mean?
No, I don't think so. I think as it is, the volumes really dry up. And given that a lot of our FI fund managers would be also on the leave, given that that's a much bigger thing outside India. I think on the thin volumes, you would invariably find the market moves being either ways very strong. As it is, if you see the trend for the last few months, we have been more on domestic buying. You have been seeing SIP inflows. And to that extent, domestics have been generally the buyers. But the good news, and I'm saying it in a good fashion, that's good news that we had a FI selling, which made sure that the markets are more balanced. There was no wild moves on the way up because of the strong domestic buying, given there was compensating FI selling. It so happened that towards this week, the domestics continue to buy, but FI selling might be a little more.
Exactly. I think that could be one of the reasons that finally, after Christmas, a lot of the FPIs have finally decided to take their holiday, right? So when the domestic buying is coming in, it's not being offset by this wave of selling on a daily basis that we've gotten used to seeing.
Surabhi, it's not fair. You can't ask a mutual fund manager, are you, seeing NAV management? It is like asking Johnny, did you eat sugar? He's going to say, no, Papa. Okay, no, let's, I raised that question from my list. But Anand, more importantly, there has been a lot of buying, obviously, in the new age stocks. Whether it's the Zaggles or the Zomatos, even the Paytms, the PB Fintech, which is not really new, but new age stocks. What's your sense there? They're all fairly valued. Would you still be interested in those kinds of stocks, the Swiggies, Olas, you name it?
I think within our team, we've been very closely watching this space. This is indeed not only new tech and others, but even in unlisted space, we've been seeing quite a lot of action among the retail investors investing heavily into unlisted also. So with my 24 years of experience, I can tell that, there is heightened interest in these companies. People are thinking that this is a very easy business. As I see, and if I have to speak about organized retailing alone, I think we have a war coming up there. It's not only the quick commerce guys. There are traditional modern retail traders, the Amazons and the Flipkarts also, who uh, are getting onto the game of faster delivery. It's not quick commerce, but nevertheless, as I see from a customer's point of view, you're going to get value, you're going to get convenience. And we have seen this in airlines before, we have seen this in telecom before, where we actually got a better quality product, better quality service, at the same time lower price. And that meant really difficult times for the equity investors in those areas. And to that extent, it's a little scary where there has been this sort of heightened interest and no questioning on the valuations. When you don't question valuations, we have seen again in the past, in many instances, that's been a very bad news for many shareholders in those areas.
Okay. Okay, let me come to the traditional bunch. That's the underperformer of the year. I mean, if you looked at the top stocks, there's every danger that Reliance, HDFC Bank, Asian Paints, etc., are going to end the year in the red, which would be, according to Hurma's, the first time since 2014 that some of these stocks would be ending in the red. What do you like in this smokestack in the old space?
I think we are looking at only the large caps, and that's why I said 2020. So run up to 2020, we had a very narrow rally into these names you spoke about, and a lot of money flew in those areas. 2020 to 2024, or precisely in last 4 years, it's been more broad-based. So actually, in the old economy also, we have had fabulous returns generated in even as simple as metals, in general manufacturing allied, the cap goods, industrial products. I think there has been a lot of action happening on particularly infrastructure and manufacturing side, and that's where the money is.
Okay.
Anand, okay. Yeah, we do have you with us. I thought that feed is dropping. So Anand, now let's start boiling this down to what to do in this market in 2025. Like you're saying that there are a lot of moving parts in terms of international cues, etc. But if we talk about just keeping your head to the ground and looking at interesting opportunities, at least from a medium-term perspective, then what would get top billing from you? Would it be capex? Would it be manufacturing? Would it be pharma? And within that, if you could be more specific in terms of niche themes, a part of consumer, what are you looking at and what excites you as we enter the new year?
Indeed, quite a few ideas there. But before we come to that, I think from the investors' perspective, the expectation should be far more muted. We are entering the areas where we are talking about slowdown in India as well, but slowdown in Europe, slowdown in China, all this is having quite an impact on the earnings growth rate in general. And to that extent, in the next couple of years, we are actually tiding again, and we have to fight against the tide of slowdown in general and a lower earnings growth rate, unlike the last few years. Coming to areas, I think you're always speaking about banking, and banking has been struggling. But when we see risk reward, while there are initial fears of NPAs, especially in the unsecured area, I think still the banks gets our attention at this point of time, given the relative valuations versus ROEs that they will generate. Outside that, select manufacturing is what we continue to like. It will be more bottom up than top down. Within consumption, we have been more keen on services. We like more of telecom and more of airlines and travel. That's where incremental spending is happening from the household. The products we've been consuming enough and more. The penetration game might be left in few categories, but otherwise it will be a low growth area. What within the consumption space we believe will grow faster would be the services.
Okay.
Okay. So when you say services, that would be largely, I'm guessing you're saying travel, hospitality. So within consumer, you'll stick to that. Anything else? But for instance, if you look at throwback to this year that's closing out, for instance, Trent was an outlier. We kept talking about how there's pain at the bottom end and, how sort of lower end consumption is not picking up. But look at the Zudio story and look at what that did to Trent. So any thoughts beyond this retailing? And that also starts bringing in some of the newer age stocks, right? Your Zomatos and Swiggies and Nykas. Consumption is becoming far broader than what it traditionally used to be, the traditional staples. So anything beyond the travel and the hospitality side in consumer?
Indeed, I think organized retail is another area which will grow faster than the consumption itself, right? So while the Indians might be continuing to consume the same stuff, they're consuming it differently, or in the way they're purchasing it differently. So organized retail has been there now for more than 2 decades, and we've been shifting the way we are purchasing goods. And no doubt that organized retail can also or will also grow faster than the overall consumption pack. Separately, consumption of financial services. I think the insurance, the asset management company, the broking companies, the capital marketplace, those are the other services which the Indian household been consuming more. I think healthcare, particularly the diagnostics, these are the areas where, again, the penetration will increase. The amount of money an Indian household will spend on healthcare services also would increase. So, whole gamut. I think education is another one. There might not be many listed players there, but that's also the areas where the household is spending more for the kids' education.
Okay, just very quickly, Anand, consumer discretionary or consumer FMCG, mass consumption?
No, I think we've been underweight both consumption discretionary as well as FMCG. I think they were a big beneficiaries of China exporting deflation. I think we had a very, very long period of time, very, very benign commodity prices, which allowed them to increase penetration at the same time, not pass on too much inflation to the consumer. I think that's changed. If you see last 4 years, the end product inflation is very high and the consumers are struggling. I think this is happening at the same time, and to that extent, I see, and the margins are at all-time high for many of these companies. So I think this combination of things we believe will not augur well for the earnings growth rate in this area.
Got it.
Muted top-line growth rate, muted earnings growth rate, and that's why we're underweight this area.
All right. Got that. Thank you very much. We hope, of course, things change for the consumer and from the consumer as well. Anand Shah, pleasure speaking with you. Have a brilliant 2025.
Thank you so much.
All right, Anand. With that, let's move on. And